Based on the historical data and forecast, Bitcoin has been in a downtrend, consistently testing the support price of $84,700. The RSI consistently indicates oversold conditions, hovering below 30, suggesting potential for a bounce. However, the forecast predicts continued downward pressure, with prices potentially reaching $83,800. The Bollinger Bands show that the price is nearing the lower band, indicating a potential short-term rebound, but the overall trend remains bearish. Therefore, I recommend a cautious long position strategy targeting a short-term bounce. Entry price should be $84,800, coinciding with the forecast price on November 26, 2025. A stop loss should be placed at $83,800, just below the forecast low, to limit potential losses if the downtrend continues. The target price should be $86,700, aligning with the forecast high for the week, aiming to capitalize on a short-term rebound. This strategy combines the oversold RSI signal with the potential for a short-term bounce predicted by the Bollinger Bands, while acknowledging the overall bearish trend with a conservative stop-loss and target price. Based on the historical data and forecast, Ethereum demonstrates a downtrend with significant volatility. The RSI consistently remains below 30, indicating oversold conditions, and the forecast prices for the next week continue to trend downwards. The support price remains steady at $2,770, while the resistance fluctuates. Considering the current oversold status and the projected downward trend, I recommend a short position strategy. Enter a short position at $2,870, placing a stop-loss order at $2,890 to limit potential losses if the price unexpectedly reverses. Set a target price at $2,770, aiming to capitalize on the anticipated downward movement. To enhance the strategy, incorporate the Bollinger Bands. The price is currently near the lower band, confirming the oversold condition. If the price touches the lower Bollinger Band at $2,760, it further validates the short position. If the price breaks above the upper Bollinger Band, consider exiting the position. To optimize risk management, adjust the stop-loss order to $2,880 if the price shows signs of stabilization. This combined strategy leverages RSI and Bollinger Bands to maximize potential returns while minimizing risks, aiming for a profit of $100 per Ethereum. Based on the historical data and forecast, XRP has been in a downtrend, consistently testing the support level of $2.1. The RSI consistently dips below 40, indicating oversold conditions. The Bollinger Bands show that the price has been trading near the lower band, further confirming the downtrend. Considering the forecast for the next week, the price is expected to fluctuate between $2.11 and $2.28. I recommend a long position strategy when the RSI falls below 30, indicating a strong oversold condition. The entry price should be $2.01, with a stop-loss placed just below the support level at $1.94. The target price should be $2.28, aligning with the upper Bollinger Band and the forecast high. To create an efficient portfolio, I suggest a combination of the RSI and Bollinger Band strategies. When the RSI falls below 30 and the price touches the lower Bollinger Band, enter a long position at $2.1. Set a stop-loss at $2.01, slightly below the recent low. The first target price should be $2.2, near the center of the Bollinger Bands. If the price breaks above $2.2, move the stop-loss to the entry price of $2.1 and set a second target price at $2.28, aligning with the forecast high and the upper Bollinger Band. This combined strategy leverages both indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, BNB exhibits a downtrend with significant volatility. The RSI consistently dips below 30, indicating an oversold condition. The Bollinger Bands show that the price is nearing the lower band, suggesting a potential bounce. Considering these factors, I recommend a contrarian strategy, aiming to capitalize on short-term rebounds while mitigating downside risk. We will enter a long position at $820, placing a stop-loss at $814 to protect against further declines. Our initial target price will be $832, aligning with the support level and a reasonable profit target given the current trend. To refine this strategy, we will incorporate a dynamic approach using the RSI and Bollinger Bands. If the price reaches $832, we will partially book profits and move the stop loss to the entry price of $820, securing gains and protecting against a reversal. If the price continues to rise, we will set a second target at $841. Conversely, if the price falls below $814, we will exit the position entirely. This combined strategy balances the potential for gains with robust risk management, crucial for navigating the current market conditions. Based on the historical data and forecast, Solana demonstrates a downtrend with periods of consolidation. The RSI consistently hovers below 35, indicating oversold conditions. The Bollinger Bands show the price near the lower band, reinforcing the bearish sentiment. The support price is consistently at $130, while the resistance is at $144. Considering these factors, I recommend a long position strategy targeting a potential bounce from the oversold level and a move towards the resistance. The entry price for this strategy should be $129, capitalizing on the current oversold condition and proximity to the support level. A stop loss should be placed at $127 to mitigate potential losses if the downtrend continues. The initial target price is $134, aligning with the forecast price and a move towards the resistance level. If the price breaks through the resistance, the target price will be adjusted to $144. This strategy combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, TRON shows a downward trend with consistent support at $0.271 and resistance around $0.275. The RSI consistently falls below 50, indicating a weakening momentum, and dips below the oversold level of 20 on November 22nd and 23rd. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential bounce. Therefore, I recommend a contrarian strategy, aiming to capitalize on a potential short-term reversal. My recommended strategy is to enter a long position at $0.27, coinciding with the forecast price on November 28, 2025. Set a stop loss at $0.268, just below the forecast price for the next day, to limit potential losses if the price continues to decline. A reasonable target price would be $0.275, aligning with the resistance level and a potential bounce from the lower Bollinger Band. This strategy leverages the oversold RSI and the support level to capture a short-term upward movement, while the stop loss protects against further downside risk. Based on the historical data and forecast, Dogecoin is currently in a downtrend, showing consistent price declines over the past 2 weeks and a forecast of continued downward movement. The RSI consistently remains below 50, indicating a weak momentum. The price has repeatedly tested the support level of $0.152, and the Bollinger Bands are contracting, suggesting decreasing volatility. Given these factors, I recommend a short position strategy. We will initiate a short position when the price reaches $0.148 on November 26, 2025. The stop loss will be set at $0.150 to protect against a potential short-term reversal. The initial target price will be $0.135, aligning with the lower Bollinger Band and a further decline based on the overall downtrend. To refine this strategy, we'll incorporate RSI signals. If the RSI falls below 30, indicating an oversold condition, we'll tighten our stop loss to $0.147. Conversely, if the RSI rises above 50, we'll consider exiting the short position and potentially reversing to a long position. The final target price will be adjusted based on the support and resistance levels. If the price breaks through the $0.135 target and shows signs of stabilization, we'll adjust the target price to $0.14. This combined strategy, integrating trend analysis, Bollinger Bands, and RSI signals, aims to maximize returns while mitigating risk in the current bearish market for Dogecoin. Based on the historical data and forecast, Cardano is showing a clear downtrend. The price has consistently been making lower lows, and the forecast for the next week indicates continued downward pressure. The RSI consistently remains below 30, indicating an oversold condition, but the downtrend is strong enough to suppress any significant bounce. The Bollinger Bands are also widening, suggesting increased volatility and a potential for further price declines. The support price of 0.405 has acted as a reliable floor, and a break below this level could trigger further losses. Therefore, I recommend a short selling strategy with an entry price of $0.407. To manage risk effectively, set a stop-loss order at $0.428, just above the recent high. This will limit potential losses if the price unexpectedly reverses. The initial target price should be $0.389, aligning with the forecast for December 1, 2025. However, given the strong downtrend, a second target price of $0.366, corresponding to the bottom of the Bollinger Bands on November 25, 2025, can be considered for maximizing profits. This combined strategy leverages the RSI oversold condition, the Bollinger Band's volatility, and the overall downtrend to generate high returns while carefully managing risk. Based on the historical data and forecast, Bitcoin Cash has shown volatility, fluctuating between a support price of $495 and a resistance price of $556. The RSI has been oscillating around the mid-range, with periods of oversold conditions below 40 and overbought conditions above 55. The Bollinger Bands indicate periods of increased volatility and potential price reversals. Considering the recent upward trend and the forecast predicting prices above $520, I propose a moderately bullish strategy. We will enter a long position at $518, placing a stop-loss order at $495 to mitigate potential losses. The initial target price will be $556, coinciding with the resistance level. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI drops below 40, indicating an oversold condition, we will consider entering a long position at the prevailing price, with a stop-loss at $495 and a target price of $556. Conversely, if the price touches the lower Bollinger Band, suggesting a potential bounce, we will enter a long position at that price, with a stop-loss at $495 and a target price of $556. This combined approach aims to capitalize on both momentum and mean reversion, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Wrapped Beacon ETH has been in a downtrend from November 12, 2025, to December 2, 2025. The RSI consistently remains below 39.4, indicating an oversold condition, and the price has bounced off the support level of $3,000. The Bollinger Bands show a contracting range, suggesting potential volatility. Considering these factors, I recommend a long position at $3,000 with a stop-loss at $2,940 to protect against further downside risk. The initial target price is set at $3,190, aligning with the recent resistance level and a potential bounce-back point. To refine this strategy, I will incorporate the RSI and Bollinger Band signals. When the RSI reaches below 30, which occurred on November 20, 2025, and the price touches the lower Bollinger Band, which occurred on November 25, 2025, it signals a strong buying opportunity. Therefore, I suggest entering a long position at $3,090, setting a stop-loss at $3,000, and aiming for a target price of $3,190. This combined strategy leverages both momentum and volatility indicators for a higher probability of success. Based on the historical data and forecast, PancakeSwap has shown a volatile trend with periods of consolidation and minor upward movement. The RSI consistently fluctuates around the midpoint, dipping into oversold territory on several occasions, indicating potential buying opportunities. The Bollinger Bands suggest periods of increased volatility, with the price occasionally touching the upper and lower bands. Considering these factors, I propose a strategy combining RSI and Bollinger Band signals for optimal returns. My recommended strategy involves a tiered approach. First, when the RSI falls below 35, indicating an oversold condition, enter a long position at $2.21 with a stop-loss at $2.15. The initial target price will be $2.4, coinciding with the support level. If the price breaks through $2.4, move the stop loss to the center of the Bollinger Bands, currently around $2.35, and set a second target price at $2.44, aligning with the forecast price on December 2nd. This strategy aims to capitalize on short-term price rebounds from oversold conditions while mitigating risk with strategically placed stop-loss orders. Based on the historical data and forecast, Injective demonstrates a clear downtrend. The price has consistently been declining from November 12, 2025, to November 25, 2025, and the forecast for the following week indicates continued downward pressure. The RSI consistently hovers below 50, with periods of oversold conditions below 30, suggesting strong selling momentum. The Bollinger Bands show the price consistently trading near the lower band, further reinforcing the bearish outlook. Considering these factors, I recommend a short selling strategy with an entry price of $5.72. A stop loss should be placed at $5.86, just above the lower Bollinger Band, to limit potential losses if the price unexpectedly reverses. The initial target price is set at $5.34, coinciding with the support level, offering a conservative profit target. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI falls below 20, indicating a significant oversold condition, we should consider adding to our short position at $5.31. The stop loss for this additional position should be adjusted to $5.43. If the price breaks above the upper Bollinger Band, it signals a potential trend reversal, and we should close our short positions. Given the forecast, I anticipate the price to reach $5.31 by November 27, 2025. Therefore, a secondary target price of $5.31 is set, and if reached, we should consider exiting the entire position, securing a substantial profit. This portfolio combines trend analysis, RSI signals, and Bollinger Bands confirmation for a robust and potentially high-return investment strategy. Based on the historical data and forecast, Internet Computer shows a downtrend with significant volatility. The RSI consistently fluctuates below 60, indicating a lack of strong momentum. The forecast prices for the next week suggest a continuation of this downward trend, with prices hovering around $4.52 to $4.15. Considering the support level at $2.89 and the resistance at $4.62, we will implement a combined strategy utilizing RSI and Bollinger Bands. Initially, we will enter a short position when the RSI falls below 40 and the price touches the lower band of the Bollinger Bands. For example, on November 22, 2025, the RSI was 45.8 and the bottom of the Bollinger Bands was $2.95. We will enter a short position at $2.95, set a stop loss at $3.12, and target a profit at $2.89. To refine the strategy, we will adjust the position based on the Bollinger Bands. If the price approaches the middle band, we will tighten the stop loss to $3. If the price breaks through the resistance level of $4.62, we will immediately close the position and consider a long position with an entry price of $4.62, a stop loss at $4.37, and a target price of $4.41. This combined approach, incorporating both RSI and Bollinger Bands, aims to capitalize on the downward trend while mitigating risk and adapting to changing market conditions. The most efficient portfolio will be a combination of these two strategies, providing a balanced approach to potential high returns. Based on the historical data and forecast, DoubleZero exhibits a clear downtrend, consistently trading near the support price of $0.121. The RSI consistently remains below 30, indicating an oversold condition, and the forecast predicts further decline. The Bollinger Bands are contracting, suggesting decreasing volatility, and the price is approaching the lower band, reinforcing the bearish outlook. Therefore, I recommend a short selling strategy. We will enter a short position at $0.126. The stop loss will be set at $0.138, just above the recent resistance level, to limit potential losses if the price unexpectedly reverses. The target price will be $0.0886, aligning with the forecast price for December 2, 2025. To manage risk and maximize potential returns, I propose a portfolio combining the short selling strategy with RSI and Bollinger Band signals. Given the consistently oversold RSI, we will initiate the short position at $0.126. If the price rises to $0.138, we will implement a stop loss to protect against unexpected gains. Conversely, if the price falls below the lower Bollinger Band, which is currently at $0.103, we will consider covering the short position to secure profits. This combined strategy balances the bearish trend with technical indicators to optimize risk-reward ratio. Based on the historical data and forecast, Shiba Inu shows a slight upward trend, with the forecast prices consistently above the recent close prices. The RSI consistently stays below 50, indicating a weak upward momentum. The Bollinger Bands show that the price is nearing the lower band, suggesting a potential bounce. Considering these factors, I propose a long position strategy with a focus on capitalizing on short-term bounces. We will enter a long position at $0.0000810, placing a stop-loss order at $0.0000800 to limit potential losses. Our target price will be $0.0000870, aiming to capture a reasonable profit from the anticipated upward movement within the Bollinger Bands. To refine this strategy, we will incorporate a dynamic adjustment based on the RSI. If the price reaches our target and the RSI exceeds 60, we will take profit and exit the position. Conversely, if the price hits our stop loss, we will immediately close the position. This approach combines the Bollinger Band's indication of a potential bounce with the RSI's overbought/oversold signals to optimize our entry, exit, and risk management. This portfolio will provide a high-return investment strategy for Shiba Inu. Based on the historical data and forecast, Bittensor has shown a downtrend with significant volatility. The RSI consistently dips below 40, indicating oversold conditions. The Bollinger Bands show high volatility, with the lower band frequently tested. The support price is consistently at $298, while the resistance is at $313. Given this, I recommend a contrarian strategy focusing on short-term bounces. We will enter a long position at $289, coinciding with the forecast price on November 27, 2025. A stop loss will be placed just below the support level at $295 to protect against a further decline. The target price will be set at $313, the resistance level, aiming for a quick profit. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI rises above 30, suggesting a shift from oversold conditions, and the price touches the lower Bollinger Band, it strengthens the buy signal. The position will be held until the target price of $313 is reached or the RSI reaches 80, indicating overbought conditions. If the price hits the stop loss at $295, the position will be closed immediately. This approach combines trend analysis, volatility indicators, and key support/resistance levels to maximize potential returns while minimizing risk. Based on the historical data and forecast, World Liberty Financial shows a generally upward trend, particularly evident in the recent price surge from $0.132 to $0.165. The RSI consistently fluctuates, but recent values above 50 suggest bullish momentum. The Bollinger Bands indicate that the price is currently nearing the upper band, suggesting a potential pullback or consolidation. Considering the support price of $0.145 and the resistance of $0.182, a strategy incorporating both RSI and Bollinger Bands would be prudent. I recommend a long position entry at $0.154, coinciding with the first forecast price and recent upward movement. A stop loss should be placed just below the lower Bollinger Band at $0.117 to protect against a potential downturn. The target price for this trade will be $0.169, aligning with the upper end of the forecast range and the resistance level. This strategy prioritizes capturing the anticipated upward momentum while mitigating risk with a conservative stop loss. The RSI readings, though approaching overbought territory, haven't triggered a sell signal yet. Therefore, a long position with a specified entry, stop loss, and target prices offers a high reward potential with manageable risk, capitalizing on the observed trend and forecast data. This approach blends technical indicators to maximize efficiency and potential returns. Based on the historical data and forecast, Plasma exhibits a clear downtrend, consistently trading below the Bollinger Band center and approaching the support level of $0.196. The RSI consistently remains below 50, indicating a bearish momentum. The forecast predicts a continued decline, with prices dropping to $0.187 and further down to $0.151. Therefore, a short position strategy is recommended. I suggest entering a short position at $0.204. The stop loss should be set slightly above the recent high at $0.212 to protect against potential short-term rebounds. The initial target price should be the forecast low of $0.187. To optimize returns, we'll implement a dynamic target price strategy based on the support level. If the price reaches $0.187, we will move the stop loss to the entry price of $0.204 and set a new target price at $0.151. If the price continues to fall and breaks through the $0.151 level, we'll adjust the stop loss to $0.165 and aim for $0.159. This layered approach allows us to capitalize on the downtrend while mitigating risk and maximizing potential profits. The overall strategy combines technical indicators and forecast data to create a high-probability short position with clearly defined entry, stop loss, and target prices. Based on the historical data and forecast, Ethena demonstrates a clear downtrend with periods of consolidation. The RSI consistently hovers within the oversold territory, fluctuating between 27 and 44, indicating potential for a rebound but also suggesting persistent selling pressure. The Bollinger Bands show that the price has been trading near the lower band for the past 2 weeks, further reinforcing the downtrend. Considering the forecast for the next week, the price is expected to remain within a narrow range, between $0.244 and $0.262. The support price is $0.277 and the resistance price is $0.291. Therefore, I recommend a cautious long strategy, capitalizing on potential short-term bounces while mitigating downside risk. My strategy involves entering a long position at $0.244, coinciding with the first forecast price and a deeply oversold RSI reading. A stop-loss order will be placed at $0.234, just below the lower Bollinger Band, to limit potential losses if the downtrend continues. The initial target price is set at $0.26, aligning with the upper end of the forecasted range and a potential test of the resistance level. If the price reaches $0.26, we will consider moving the stop loss to break even to protect profits and potentially ride further upward momentum. This approach balances the potential for gains with a disciplined risk management framework, suitable for the current market conditions. Based on the historical data and forecast, Quant shows a fluctuating trend with recent upward momentum. The RSI consistently hovers around the mid-range, indicating neither strong overbought nor oversold conditions. However, the forecast data suggests a potential for further price increases, with a predicted range between $81.3 and $90. Considering the support price of $83.9 and the resistance price of $100, I propose a strategy focused on capitalizing on potential breakouts. We will implement a portfolio combining the RSI, Bollinger Bands, and support/resistance levels. Our strategy will involve a long position with an entry price of $82.9 on November 27, 2025. The stop loss will be set at $81.3 to mitigate potential losses if the price reverses. The initial target price is $84.3, based on the forecast data and the proximity to the support level. If the price reaches $84.3, we will move the stop loss to the entry price of $82.9 to protect profits. A second target price will be $86, based on the forecast data. If the price reaches $86, we will move the stop loss to $84.3 to secure profits. Finally, we will set a final target price of $90, based on the forecast data. This combined approach aims to maximize potential returns while effectively managing risk.